So, we're diving into the profit engine of modern banking. You trust them with your paycheck, your savings, everything. But have you ever really stopped to think about how your bank actually makes its money? Well, it's one powerful engine, and today we're going to pop the hood and take a look inside.
So let me just ask you this. Ever wonder what your bank is really up to with your hard-earned cash? I mean, it seems simple enough, right? We deposit money, we pay our bills. But what is actually happening to that money when it's just, sitting there in your account?
Okay, the first thing we gotta get straight is this. Your money is definitely not just collecting dust in some giant vault. Nope, it's out there and it is working. You really gotta think of your bank less like a storage locker and more like a high-performance engine. And your money, well, that's the fuel that makes the whole thing run.
All right, so if it's an engine, how in the world does it generate profit? Let's get right into its main profit engine. And you know what? The primary method is actually surprisingly simple. It all boils down to one powerful idea: interest. Check this out, because this is the core of the whole operation. On one hand, the bank pays you a tiny little bit of interest for keeping your savings with them, maybe 0.2%. But then they turn right around and lend that exact same money to someone else for a mortgage or a car loan, and they charge them something like 5%, maybe even more.
And that gap, that huge difference between what they pay you and what they charge someone else, that's got a name. It's called the interest margin. And honestly, that's the bank's entire business model in a nutshell. They borrow from you for cheap, and they lend to others for a premium. That margin is where the lion's share of their profit comes from.
And if you really want to see the true power of this margin in action, you don't have to look any farther than a mortgage. It's the perfect example. See, a bank isn't just collecting interest for a month or a year. With a mortgage, they're collecting it month after month for 20 or even 30 years.
Let's put some real numbers to this, because this is where it gets a little wild. On a pretty typical $200,000 30-year mortgage, get this, the borrower might end up paying back over $140,000. And that's not the loan amount. That's in interest alone. All of that profit created purely from that interest margin we just talked about.
But hold on, interest isn't the whole story. Not by a long shot. Banks have a second major revenue stream, and this one is all about the power of small fees, those little everyday charges that we've all seen.
I'm sure some of these look familiar, right? Account maintenance fees, those killer overdraft fees, ATM charges, credit card annual fees, late payment penalties. They might seem small and just kind of annoying on their own, but for the bank, this is a huge piece of the puzzle.
Let's just zoom in on one of them. A simple $3 monthly account fee. On its own, it's almost nothing. You might not even notice that $3 is gone.
But what happens when you take that tiny little fee and you multiply it across the bank's massive customer base? Let's say 1 million customers are paying it every single month.
Suddenly, boom, that tiny fee is generating $3 million a month. That works out to $36 million a year from one single small charge. That right there is the incredible power of scale in banking.
And we can't forget credit cards. They're like the ultimate one-two punch for banks. They charge fees, for sure, but they also make massive profits from those super high interest rates, sometimes soaring way above 15% on any balance you carry from one month to the next.
Okay, so we've got interest and we've got fees. But the modern bank's playbook doesn't stop there. They've really evolved into these complex financial hubs with a whole range of other services.
So if you look at where the money comes from, yeah, interest income is still the biggest piece of the pie. But that slice for fee and penalty income is pretty substantial. And then you've got this third, really crucial slice, money they make from investments and all sorts of other financial services.
And this part covers a ton of ground. We're talking everything from the bank investing its own capital in the stock market, to making money on foreign currency exchanges, to offering high-end wealth management for clients, and providing essential services like payment processing for businesses. Every single one of these is its own little revenue stream.
So we've seen how banks make their money, but that kind of brings up an even bigger question, doesn't it? What's the fundamental rule that allows this whole system to work in the first place? How can they just lend out money that technically belongs to their depositors?
It all comes down to a concept called fractional reserve banking. Now, it sounds super complicated, but the idea is actually pretty simple. It just means banks aren't required to keep all of your money on hand. They only need to hold a small fraction, the reserve, and they are legally allowed to lend out the rest.
Here's a quick example. You deposit $1,000. The bank is required to keep a fraction, let's say 10%, so $100, in its reserve. It then lends the other $900 to somebody else.
Now think about this. Your account still says you have $1,000, but there's now an extra $900 circulating in the economy. This is the magic trick of banking. It literally multiplies money. Now, I know what you're probably thinking. What if everyone wants their money back at once? Well, that is the big risk built into this system, and it's exactly why banking is so heavily regulated. All those rules on reserve requirements, deposit insurance, and regular audits are all designed to manage that risk, keep the system stable, and protect everyone's money.
So there you have it, the interest margin, the power of small fees, and a whole range of other services, all of it built on that foundation of fractional reserve banking. That's the engine. So the real question is, now that you know how the engine works, will you ever look at your bank account the same way again?